Good morning, good morning, good morning. In this video, we are going to take another updated look at our $25 a week dividend portfolio. As you guys can see, we are up to $1,567.71. Today is Saturday, October 9th, 2021, and things are still going well as a whole in general. I mean, because when you look at the past day, we're actually down negative 0.44%. However, the past week, we're up 1.17%. And then the past month, we're down negative 1.93%. In the past quarter, we're down negative 1.51%. But 1 year in all time, you can see we are up 8.60%. And again, our total portfolio is up to $1,576.71. And of that money, of our total portfolio, you can see our earned dividends is $34.53, while our market gain is $49.53. So one of the unique things that you'll start to potentially notice if you have a similar portfolio with similar companies, the same exact companies or very similar, is, what you want to see and what you will see is the earned dividend amount increasing. Now, it would be nice to see the market gain drastically increase too, but when it's all said and done, this portfolio, I have a feeling our earned dividends will be greater than our market gain. And if you saw my last video, it kind of helps to explain why I feel so confident about that and why I do believe having a dividend portfolio is something that will help you, regardless of where you are in your stage of the financial journey. Now, of course, it might make more sense to focus on growth companies for most of you guys watching this, because I'm assuming most of you watching are my age or younger, being in your 30s or younger. And, you don't need to necessarily rely on and live on the dividends that you're receiving. So you can focus on the growth side of things as well. That said, watch my last video. If I remember, I'll post a link to it above my head, but I will also try to remember to post a link to it down below because it helps to explain the power of dividends. Now, I will make a new updated video on compound interest that also really helps to explain the power of dividend portfolios, and just being able to, again, get your money to work for you. Sometimes people are like, oh, I get dividends, I get this money, let me pull this out and I can go and spend it today. Again, depending on where you are in your financial independence journey, that might not be the smartest decision. Most of you watching this, I have a feeling, should not be doing that. I'm not a financial advisor. This is not legal or financial advice, of course. So to each his own. That said, we're doing pretty well with our dividend portfolio and, my other portfolios also. And I will mention, I did just start a brand new growth portfolio. Haven't posted the video, but I did just start a new growth portfolio. So that's going to really start to focus on kind of startups or companies that have just gone public, fairly recently. And companies that I believe are demonstrating that they have what it takes to be a leader in the near future. So they might not be a leader now, and maybe they are potentially, because it might be a new industry. So kind of giving you a clue as to one of the companies, or at least the industries that I'll be focusing on. Kind of it's been around, but it's being revamped, we'll say. And so ultimately, I believe, having a diversified portfolio is a smart thing to do, or having a few different portfolios, but having them focus on different types of companies or sectors, industries, and so on. So I will be, I'll make that video pretty soon and get that up so you guys can see what I'm doing over there on the growth side of things. And I have other portfolios that are my personal portfolios. So one thing to keep in mind, and I will say as we dive into how all of the individual stocks are doing here, one thing to keep in mind is that I do have, other portfolios that are my private personal portfolios in which I don't want to have companies cross, basically I don't want to have the same company in multiple portfolios. So somewhat of a challenge is having a good, strong portfolio that I am willing to invest my money in and I'm willing to share with others, while also continuing to not kind of, again, because the challenge is I don't want to have the same company in multiple portfolios. So the challenge is having this portfolio be as good as it can be, despite those few companies that I might already have in another portfolio, which clearly some of you might be thinking, well, then that means this probably isn't as good as that. No, I'm not saying that. And I believe, again, having diversified portfolios will allow you to ultimately see how well one group of companies is doing compared to others. So in any case, definitely, if you haven't yet subscribed to the channel, hit that notification bell and like this video also, because I do want you guys to know that we are going to be pumping out some videos, going ham. And I know I've been saying it, but trust me, it's coming. It's coming. And also, really quickly, you guys might notice, but now I have a M1 Plus account. So I made the investment, made the move where, I want to have access to 2 trading windows. Sometimes there's important news that comes out in the middle of the day, 12 o'clock, 11 o'clock, after the first trading window happens. And you might want to make some changes to your portfolio prior to the day being over, instead of having to wait, a full day in which the news at that point has settled down and maybe it's been good or bad, but whatever happened, and you might not be able to act on it. Because, there might be a great buying opportunity. And if you are stuck with only one trading window, you may miss out on a lot of money, or you might lose a lot of money potentially. Now, again, these portfolios, we're trying to focus on the long term. So despite the bumps and hiccups that you might experience in the short term, shouldn't really matter too much. So you shouldn't be trading out companies as much as maybe just wanting to add additional money to a particular company, because again, some news is about to happen that's going to make the stock go up even higher. So as we look at our portfolio, see how things are going, pretty much looking similar to how it's been looking, and how, we've continued to see similar companies dominate and some of the same companies down at the bottom pretty much for the whole duration of this portfolio. We have Newt, our REIT, that is continuing to kill it here at the top with a 32.44% return. We have JP Morgan Chase with a 21.06%. We have Pepsi at a 20.90%. Realty Income, another REIT, at 13.35%. Then we have Procter & Gamble at 9.74%. Coca-Cola at 8.85%. Johnson & Johnson at 1.17%. And then in the red, the negatives are Verizon Communications at negative 3%, AT&T at negative 5.56%, and 3M at negative 6.44%. So, hey, seeing a little red down here, same companies that we've been seeing it kind of taking place. The story hasn't really changed much there. And on the flip side, similar story hasn't changed much. Newt just continues to demonstrate that they are, it has been a good choice. Again, though, we know REITs are very volatile. We know that, this period of them just killing it right now is not going to last forever. That said, it's fine, because this is more so geared towards, you want it obviously to be as high as possible, or at least close to zero as possible, but the higher the better, certainly for a dividend portfolio, because ultimately we're not really, on the short term, we're not really focused on this as much. Like, yeah, we want the company to grow, we want the stock price to go higher and higher, but the real, the element that's really going to be a game changer for us with this type of portfolio is our earned dividends. And so when we look at our earned dividends, and we can see Newt has given us $8.84, the most compared to everyone else. So even if Newt, well, all right, let's go down another 2. Then followed up, number 2 we have is AT&T with a $6.67. And the thing I want you guys to notice and think about and just focus on is, despite AT&T being in the red which I think in the long term, they won't be in the red, their stock price. I think, in 5 years from now and 2 years from now, I believe it will be higher. The stock price, maybe not a year, but yeah, it should be. I mean, ultimately, because of the changes they have going on with Discovery, some of some of this might not come to light for a little while, and maybe it will come sooner than some people think. I can't really say, but I do believe that one, I mean, them cutting the dividends will play a factor. It will stink, but I think the ability to shift or refocus their this dividend money into growing their company is a good thing. It will help with the overall stock price go up, which will give us more money on that front. But then on the dividend side, as you guys can see, despite them being in the red, along with Verizon Communications, well, we've received more dividend payout from both of them than every other company aside from Newt. So my point is, don't be entirely discouraged when you see a company in your dividend portfolio. Now, if this is a growth, if it's a portfolio that companies aren't giving out dividends, then being in the red is never going to be good. It's never good, period, but it's especially not good in those scenarios. At least in our case, despite being in the red, despite being down, $6.48, $5.92, or $3.15. I mean, technically, AT&T, despite us being down, technically AT&T has given us more money because it's paid us $6 and some change. So we're really not in the red as much with AT&T as it might seem. And again, this is the power of dividend portfolios and having dividend stocks inside of your portfolio, because through time, the dividend payout will pass the stock price, the stock value. Now it should, and maybe not, because maybe you get some good growth dividend company in your portfolio, maybe a company like AT&T, like Apple, in which that was something we were thinking about doing, getting Apple in the mix. Excuse me, just to help with getting a little more growth in here. But like we just broke down with Verizon and AT&T, yes, they're down right here in the red, but when we look at the dividend payout, it's higher than what we're down. So technically, we're in the green. Dividend payments, baby. Dividend stocks, dividend companies. Don't hate dividends like some people are trying to make it seem, because there's a lot of, I've seen a number of other YouTubers out there like, don't do, Graham Stephan said don't do dividends and da. It's like, Graham Stephan is doing well, certainly. However, he's not doing better than some other people that do heavily rely on dividends. And maybe we'll do a video diving into just sharing, what others believe and why are so adamant that dividend companies and dividend stocks are a good choice. And like I said, again, you don't have to have a company that's paying you $1 trillion in dividends, but any dividend payment is better than no dividend payment. And that's kind of part of the reason why we're keeping AT&T into the mix, because I believe the plans, the changes that they are implementing over there will help them with being more innovative and being able to stay up to date with, current times and continue to, stick around and be a leader. And so I think the growth side of things on that front will make up for the dividend cut for the short term. And I think the dividends will come back, in maybe 2 years, 3 years, 5 years. But I'm not too worried about that. They are where they are for a reason. Now, they're not killing it right now. So some might say, yeah, they are where they are for a reason. They're going down. I don't think so. But only time will tell. And if you guys haven't already subscribed to the channel, hit that subscribe button, hit that notification bell, because then you will be able to ride with us on this journey and find out if this was a good move, if we keeping AT&T in the mix was good for us, or maybe not. But all right, my friends, I'm going to wrap it up there. We'd love to hear what you guys think about our dividend portfolio. how is your portfolio going? Do you have the same exact companies? Do you have a few of these companies and a few others? Are you doing better? I mean, a little while ago, like 2 months ago, 3 months ago, I mean, we were killing it, up over 15%. And as I was saying at the time, we would see this come down a bit. And this looks more, I don't want to say like realistic, but yeah, I'm not upset about this, especially with kind of the hiccups that the market has experienced over the past, month or so. And you can kind of see it in the chart, some of these little dips, where it haven't been too bad, but as a whole, we're in a pretty good position. So, like I said, leave a comment down below. Let me know what you guys think about the dividend portfolio. How is yours going? Or, have you jumped ship? Did you say, no, let me focus on the growth? I want to get some big bucks more quickly and, take a little more risk there. What do you guys think? Also, if you haven't already started to invest with M1 Finance, definitely consider doing so, where you can create your own dividend portfolio pie. I love it. It's so easy. You got all your different slices and you can easily see what percentage of the pie they are and, how much money you got there and so on and so on. I'm a fan. I'm sure many of you will be as well, especially if you are new to investing and you don't want something too intimidating like Webull, which I'm also a big fan, but it just gives you, access to day trading, swing trading, charts and graphs. So I got links to both Webull and M1 Finance down below, where you guys can get some free money or free stocks when you sign up and fund your account. I think like $100, I think, at the minimum. Then you can get some free stocks or free money. Not a bad deal. But all right, my friends, I got to keep it moving. Much appreciation for sticking around and watching. But you already know, I'll see you in the next video. Peace.